Hello all, Andrew Taxes here, AVK Wealth, my brand new company. I'm excited to go. Today, we got a video for you covering basics of money. First off, not a CPA, not a lawyer, but I am an educator. I have been doing this for a long time, and technically by the state of Florida, technically by my teaching certification, I am allowed to teach finance through the state of Florida in their standards, which is I know kind of weird, but it long story short, if you get your social studies certificate, you're allowed to teach, and this is again 6 to 12, you're allowed to teach financial education, which I can. So if you go up into the Florida DOE and you look up those standards, you can actually look this stuff up. But my perspective is to give you real world application of how money basically works. Um, who am I? I've been doing this for quite some time as a teacher. I've been teaching for about 20 years. I realized in teaching, I was an employee, making money, obviously a salary every year. And then I learned about that not all income is created equal. Some income is different than others. And I realized I wasn't as good with money as I thought, and I started doing a lot of research into it and became, I don't want to call it an expert in it, but I would say I was more of a student of the game, became a student of finance, became a student of money, and it's really helped me out in the long run being able to do that, especially coming from my education background. Um, Let me stop you right there. If you find some sort of value in this video today, please like and subscribe the video. That's going to help the algorithm out for people to pick up this channel, so more people can find the video and more people can get help by this stuff. So please do that. So, money, where does it start? First, you kind of have to know how money works. So let me pull up my whiteboard over here. Robert Kiyosaki talks about this thing called the cash flow quadrant. Most people who get into financial education pick up Rich Dad, pick up Robert's first book, Rich Dad Poor Dad, and that's kind of like their gateway into financial education. So if you look at financial education as a quadrant, you have your E, your S, your B, and your I. The E stands for employee, the S stands for specialist, B stands for business, I stands for investor. Now, most people who work a W-2 job, who work any job, and again, when we talk about money here, I want to make sure that we are not talking about specific jobs, because your job title has very little to do with how money works. Now, your job title will depend on how much money you get, but whether you work at McDonald's, whether you work at Target, whether you're a high-powered lawyer, whether you're an athlete, singer, musician, whatever, you still get money, and depending on how that money is used, will depend on how much you keep and how it's spent. So we need to start talking about taxes then, because when you start looking at money, the government is the one that issues money to you. They're the ones who issue that almighty dollar to you. And so when you get that money, that money is taxed. So there's different type of incomes. You have one, you have earned. Sorry, my handwriting is terrible. Two, you have passive. And then three, you have capital gains or portfolio income. So earned income, number one here, is the highest tax rate. And most people who work jobs, we'll call this a W-2 or a job, you are in these two categories. Now, as an E, you are taxed normally about 40% or lower. And then as you get more education, you become a specialist. So let's say you get that master's, or that PhD, or you become more specialized, getting more certificates, you are going to move your way down into the specialist category. And as you make more money, the government's going to take more money. So then you get taxed at possibly 60%. Now, this is going to vary um, depending on the state that you live in. For example, California, New York, they're going to have higher tax rates than, let's say, someone like me in Florida. Businesses can be taxed anywhere basically at 20%. And if you are the investor, you could possibly pay zero in taxes. Now, that's kind of the overall breakdown. Now, this was new to me when I was learning about money because this was not something that's taught in schools, which in a future episode, I'm going to be talking about schools and why people think about money the way they do. Because everyone knows that school doesn't teach about education or financial education. But why? How does that work? So we'll get into that in another one. But for now, let's stay right here. Let me get a sip of my Zoa. I love Zoa. I would love to be sponsored by Zoa. So if The Rock is out there, let me get sponsored by Zoa. Let me pick that up. So if you wanted to find more information about you know, Rich Dad Poor Dad, Tom Wright wrote these two books, um, Win-Win Wealth Strategy and Tax-Free Wealth. These are excellent books to start learning about how taxes work. Now, I know tax is a boring subject, but not to me because it affects the way your money works. And when you know how money works and what the government wants you to be able to do with that money, more money will come to you. So make sure you pick up those two books because everything that I'm kind of generally talking about are in here. And as I talk about money, I'm going to be definitely referencing these two books all the time because you really can't talk about money without talking about the government being a partner with you and how the government wants you to make money. So, anyways, the more money you make, the more money the government's going to take because the tax code increases. So, let me erase all this here. Let me erase all my stuff over here. Okay, almost there. Good. Let me X this out. Now, let me share my screen. Let me that out. So when you're looking at the IRS, you have your different tax rates here. So if you are a single person, you're going to be paying a 10% tax rate on 0 to up to 11,000. If you're single, you could be between 11,000 and 44,000. You can pay 12%, 22, so forth and so on. So you can see the more money you make over here as a single person, the higher the tax rate goes. Now, again, if you are married, pull up the married one, you can see that the tax rate again increases for married people, but the amount of money, since you are combining your money and putting it together, you can see that the incomes are just a little bit higher because you're combining your income. So, but let's stick with the single person for now. The average American, I'm going to say, is probably in the neighborhood of 182,000 to $0. So you're probably going to be in this bracket right over here. It is possible. Obviously, there's a lot of people out there you could fall under these tax brackets. So, this could pertain to you, but I'm probably going to be speaking to the person who's most likely down here. So, as you can see, after 11,000, you're not jumping up too high. You're only jumping up about 2%. But once you hit over 44,000, but let's call it 45. I know it's 44.72. You jump a 10% tax bracket right here. And then once you get over 95, you're jumping another 2. And then if you can get over to 182, you jump another 10%. So the huge jump comes between less than, we'll call it 44,000 or more than 44,000. And the second jump comes from um, over 182,000, which is right here. So those are going to be your two main jumps. Move this out of the way here. Next, if you're looking at tax rate, that's just the federal rate. Now we have to look at state rates. Now, I'm going to go to my home state of Maryland right here. Fear the turtle. My wife tells me that the turtle's stupid, whatever, but fear the turtle. So if you look at tax rates, these are Maryland tax rates for how much money you could possibly make. So it tells you that you are going to owe 5% plus a certain fee. And also in the state of Maryland, you also have to pay local tax rates. So you have to pay federal, state, and local. And so there we go. It is 3% for the most part, three and some change depending on where you live. I come from Montgomery County originally. So Montgomery County has a 3%, 2% um, tax and creating the local level. So what does this look like? Because this is just a bunch of numbers. If we're looking at the federal, this is how much taxes they could take out here. This is how much taxes they could take out in the state. But let's put this all together. So I use this this website called smartasset.com. It's a website that I love to use to figure out how much money or how much taxes are going to be taken out. You can go to your federal income tax calculator. You can put in your taxable income. I'm using Silver Spring, Maryland because it's taxed at a federal, state, and local level. And we're going to look at it as a single person right now. So when you look at it, it has your federal, your state, your local, your FICA. So let's go back up here. If you make $100,000 and you live in Silver Spring, Maryland, you actually make $70,000. So you are losing close to 30% of your money because you're federal, you're going to pay 14%. Over here, state, you're going to pay 4%, and your local, you're going to pay about 3%, adding up to 29%. And you can see all the money that's taken out. So I don't care what job you have, doesn't matter. The job is irrelevant to me. If you make $100,000, you don't make $100,000. You make $70,000. And that's not even taken into account. We come down here, sales tax that you're going to pay out, fuel tax that you're going to pay out, property tax that you're going to pay out for other types of taxes. So the price is probably about 33,000. So it's just a little bit more when you talk about things that you're going to be paying for at the pump or if you're paying for food. But this is how much money that you are going to keep. And so again, when you're looking at jobs and you're going back to our ESBI quadrant, the more money you make, the more money the government's going to take. So if you're a E, if you are making in that 40% or about $40,000, your tax rate is going to be significantly lower if you are 40,000. But once you move up past that 44,000, that tax rate jumps, and so does your money. You're going to be losing a lot more. So let's just kind of pull this experiment out a little bit. Let's say that you're married and you have now two people making $100,000 and you live in Silver Spring, Maryland. Now, again, I would advise anybody go to smartasset.com, pull up your federal income tax calculator, and you can figure out what you're going to be taxed. So you can look at, you made 200,000, right? As a family, you lost, see here, again, close to about 30% of that income, which is about $56,000. So you're really making 143. Now, this is before any of your expenses. This is before you've spent anything on a house, on a mortgage, on a car payment, on gas, on vacations, on food, on movies, on anything. You are keeping 143,000. So that's with a family of two. That's just taxes alone. So when you're talking about money, I don't care what your job is, you have to keep in mind how much money are you going to keep after the government gets its fair share. Now, the issue comes with how you are taxed, because when you are taxed, um, businesses have different regulations where you can write things off. So when you're looking at the B and I quadrant, there's a lot of things you can write off. There's not a whole lot that you can write off as a W-2 employee, which we'll cover in another episode about what's covered, what's not covered, what is a standard deduction, all that kind of stuff. But I want to kind of keep it straightforward and to the point of, basic 101 money, understanding basic taxes. Now, again, you don't have to be a CPA, you don't have to be a lawyer to be able to go over here and figure out um, what the tax code is. This is for everybody. I don't care who you are, old, young, middle class, rich, poor. Anybody can go over here and look up the tax rate. Anybody can go to their state and pull up their tax rate. Anybody can go over here to smartasset.com and they can put in their money and they can put in where they live and if they're married or not. If they're single and maybe they make $200,000, whoo, 33%. That just hurts. You're actually taxed more as a single person. And anybody can put this in. You don't need any math degree. You don't even need a fifth grade math education. All you need to be able to do is input numbers, and you're going to be able to get what your take home pay is. So when people talk about, I want to be rich, or I want this much money, or I want whatever that is, they don't take into account their partners with the government, and the government's going to take its piece. Now, there are some different things you can do on your W-2 to keep more money or get a big refund. I would not advocate for getting a big refund because the big thing is you're going to spend approximately your first 4 months. Let me stop sharing this. You're going to spend your first 4 months paying the government in taxes. I wrote something down here. Yes, they say it takes about 108 days of your money, of you getting paycheck to pay the government. After that 108 days, then you get to keep all that money. They call it what was it? Your tax freedom day. And every state has a different tax freedom day where you're spending the first couple months paying the government its taxes, and then after that you get to keep everything. Now, the problem is if you're overpaying the government, if you're taking too many not deductions, but you have too many exemptions, or you're basically withholding more money to get that big refund, you're giving the government a loan. You're giving the government a loan, and the government's going to take that money and they're going to put it into a account. They're going to put it, let me see in my notes. What did I put in here? Um, um, what did they say? The government pulls its funds and other revenues and deposits and puts it into various accounts to invest into financial instruments that collect interest. So they put it into, what does they say? A general revenue fund that all taxes go into. So they go into this general revenue fund, and then the government's going to take your money that you gave them for taxes because you overpaid, and they're going to put it into all these different investments, and they're going to collect interest on that money that's sitting in the bank account because you are taking your money and you are giving it to the government, and then the government's going to invest your money appropriately until you come at the end of the year. You want that tax refund. You do your tax and you get your money back, and then they'll give you the money back, but they've already collected all the interest. So again, keep in mind, if you want to give the government a loan, by all means, go ahead. You give them that loan at the end of the year, because if you're you know, taking more not deductions, I keep saying deductions, but if you keep giving them like pulling taking more money out of your account each paycheck and giving it to them, they're going to use your money wisely. But are you using your money wisely? Are you not giving the government more than it needs? Because you can still be a good person, a good citizen, pay the government its taxes and not overpay them. But again, it goes back to understanding. Um, go back to the whiteboard over here. It goes back to understanding the very basic concept of ESB and I, and where you stand on that. See if I can write it here. There we go. E, S, and your B and I. There it is. And again, if you're in the E, you'll be paying a lower tax bracket. If you're in the S, you make more money because you have a master's degree, you have that PhD, whatever you have. You have more time to game, you have more experience. And so you move down into this category. Maybe you're a singer that makes a ton of money. Maybe you're an athlete that makes a ton of money. you're still an employee because you're working for somebody, and that money is taxed at its highest rate at its earned income. Yeah, it's earned income. And so again, it can possibly get up to 60% depending on what state. So you're gonna be paying a lot of money over here. And again, notice how I haven't talked about doctor, lawyer. I haven't talked about that. I'm just talking about the money you earn. The more money you earn, the more the government's going to take and the more you keep. But most people, they just want that job. They want to start making money so they can spend money. And they become this consumer that's consuming all the time and not producing anything. And when you get $100,000 and then you are losing, let me put $30,000, and you are only keeping $70,000. Now that's a good chunk of change. That's not something to shy away from. However, what are your expenses for the year? What is your car? Do you have a student loan? Do you have high electricity bill? Like, what is it that you're doing with the 70 G's a year? And are you investing any of it? So this becomes a big issue of, what do you do with this money that you have it? And again, we'll talk more about the B and I side and how that works. But for most people watching this channel, they're probably on the E and S side of things. They're probably employees, people who work 40 to 80 hours every 1, 2 weeks. There are people who are earning, I don't want to sit there and say minimum wage, but you're probably earning probably a decent chunk. You're probably somewhere in this range of the middle. You're probably between 40 to 100,000, most likely. Now, again, this is not everyone. This could be anybody could watch this channel and pick this up. But most likely the average person is right here in the middle. And you got to take that in account, like what is coming out of your check. So depending on what job, depending on where you want to go to school or what education you want to get, you got to be very aware of these quadrants and how much money the government is going to be taking out for that. So just be aware of that. So that's been a whole mouthful. That's been a lot of information. It's taken me a while to kind of pick up all that information, be able to use it. But how does that apply to me? How does that apply to you? Make sure if you are a teenager and you are looking for that first job, be aware of that income that you're going to be getting, no matter what it is. And every time you want to become a manager, you want to move up that rank, that's good because I love moving up the corporate ladder too. But be aware every single time that you move up and you get that raise, the government likes that raise because you may be placed into that higher tax bracket. And the more money you take, the more money they're going to keep. And again, keep in mind if you are getting a degree, if you're getting a bachelor's or you're getting a master's, and you're sitting there saying, "Oh my goodness, I'm going to make so much more money." That is true, but again, you become partners with the government, and they're going to take that bigger chunk because when you move over that 44,000 mark, you're moving up 10% in that tax bracket. So they're going to take that bigger chunk. And again, keep in mind there's still sales tax, fuel, all these different taxes that are also hitting you. So just be aware that that money is coming out. So if you have earned income, you're going to be taking a hit. And again, we haven't even talked about inflation or quantitative easing or any of the other stuff, which are all factors that again play into this thing. But I want to make sure that is clear that taxes are your number one expense. And if you don't understand the basics, and again, you don't need to be a CPA, you don't need to be a lawyer. This is not advice that I'm giving you. These are facts. This is a fact. You can look up any of this information that I showed you, and you can figure out for yourself that the more you make, the more the government's going to take from you. That's why high paid employees do not like the government so much because they're taking up to possibly, again, if you live in California, New York, wherever you live, they could be taking up a lot more of your money. And if you're thinking that I make $1 million a year, but I don't keep $1 million a year, that I made 1 million, but I'm only keeping about 400,000 of that, they're taking 60% of your money. And if you're overpaying the government, they can be taking more. And the government's going to use your money wisely. Why aren't you using your money wisely? But this is the basic financial education that you're going to need to be able to navigate that money. So when we talk about quantitative easing, or we talk about inflation, we talk about the dollar losing its value, or we talk about businesses and investors and the tax code and how the code is built for businesses, not necessarily built for employees, because employees are meant to be citizens and citizens need to pay the government. And that's how the government gets its money. Um, I'll go over one more topic here on the whiteboard because you got to think about the government and was it businesses are two different entities. Those are the only two places you can work for. Give me my line. Those are the only two places you can work for. You have the government and then you have companies. You have the government and you have companies. And they work very differently in how they get money. Over here, this is you, the government gets fueled on your taxes. So the people are paying taxes to the government. Now, the companies make money based on sales. They have to have sales to generate revenue. This is awful here. So they are based on sales. Now, what the government does, it takes all that money and it puts it into a nice pie, and then it takes your tax money and divides it up into different categories over here. And so you get into budgets and allocations. What is the government allocated to the thing? So, for example, when people talk about teachers, oh, teachers should get paid so much, and I'm a teacher myself, so I always want to get paid more. But teachers will never get paid more, and here's the reason why. If you want to get paid more as a teacher or a firefighter or a police officer or whatever government agency you work for, you're going to have to increase taxes. The people have to pay for that. And then once the government gets involved, these guys, this is your Senate, your House of Representatives, this is your state, whatever it is, or your local governments, then they get to decide how much of the pie you're going to get. So if you get a small piece of pie one year, you're sitting there saying, well, I want more money. Okay, well, we're going to collect more taxes. And then we might give you a little bit bigger sliver of that pie for the police officers, for the fire departments, for the government agencies, the trash, the water, all that stuff. You might get a bigger piece of the pie, but you will never make more money because A, inflation's happening, but B, you're going to have to tax the people more money and you're going to get a bigger piece of this budget. Now, companies, why are they different? Because they get the same pie, but sales can increase. And as they generate more sales, more money is given to that pie. And so, what the company does, it will allocate this much money for its budget. And this budget includes employees, this budget includes goods, services, all that stuff. And then the rest of this can be profit. And again, this is an oversimplification. I know that there's a whole lot of, tax lines and all that goes into this. But essentially, a company is built to make money. It's built to make profit. Uh, it's built to make profit. That is it. It's supposed to make money because if you make no money, you have no business. And so over here, this money is meant to be spent because if it's not spent, they're going to reallocate all the money in the government. But the company wants to keep its expenses low. Another word for budget. These are your expenses. And then they can allocate some of the profit into maybe reallocate it into the business or generating more I don't know, media, more ads, whatever it is to make more money. But their whole business model is to keep profit. So when you ask them why aren't employees making more, it's because it's built into the budget, it's built into their expenses, and they can pay you more. But companies have just different models where the government needs to spend all of its money. Companies do not. They need to make a profit in order to stay in business. And so, what does that have to do with you? If you are a family, your family should be based like a company. Let me erase all this here. Let me erase all this over here. If your family is a business, and we'll talk more about this later. This will be my last bit here. Erase all this over here. If your family is a business, which it should be treated like, you need to make sure you are keeping your money. So if your family is a business, you have your income and then you have your expenses. So you have income and you have expenses. If your family, you need to make sure your family is generating more than your expenses. So, for example, you need to make, what is it? We'll call it $1, just to make things easy. You need to make $1 and you need to keep your expenses under a dollar. Let's say you spend 20 cents. Now, this is over simplification. Then your total is you have 80 cents. Very basic. And again, you need to make sure that income, going back to your taxes, right? What is the government going to get out? What are your expenses? So this is almost an inaccurate model because I need to make sure I take out taxes. So I might take out my tax over here. So let me erase the expenses here real quickly and get rid of this piece. So let's get rid of our taxes, right? Let's subtract that. Let's say that is, what do we say, 30 cents, right? So then we're going to subtract 30 cents just to make it super easy. So now you're left with 70 cents because the government took their piece. Then you have your 20. Then we're going to subtract your expenses. These are your expenses. We're going to keep the 20 here. So then you're left with 50 cents. Again, I know a super oversimplification of the whole entire process. But again, you have your income, you have your taxes, and you have your expenses. So then you're left with 50 cents. Now, again, what is it that you're doing with the money? And that's what my channel is going to help us figure out over time when we're looking at money and how all this stuff works. So, a lot of information. So, here's the takeaways for today. Here's the takeaways I want you to take home with you today. Number one, how much money are you making? How much money is being taken out in taxes? What is your tax bracket? And again, if you need to, go to smartasset.com, plug in your numbers. You can pull out all the deductions. You can do a paycheck calculator if you want. Figure out what's coming out. Number two, figure out what are your expenses. What are your expenses being taken out? Take that out, and then you should be left with your budget. Normally, they call that filing taxes. But if you are doing that, you are now becoming more educated about money, about how money is coming into your family, how much money is coming out, and what is being left over. And again, we're going to be talking about in another video. I know I got a lot of videos, got a lot of ideas. Um, what does your financial statement look like? What is your income and expenses look like? What are your assets, your liability, all that kind of good stuff. So we can take a deeper dive into it. But if you don't understand your what's coming out in taxes, I don't care what your job is. Your job could be anything. Your job could be rock superstar. Rock superstar has to make money in order to live, and they are no exemption from taxes. And that's why you see all these broke athletes because they make all this money and they're like, oh, I got $1 million. But they don't have $1 million because they got to pay their fair share of taxes, and then they got to I don't want to call it fair share, but they have to pay their taxes, and then they have all these expenses like cars and houses, and then they realize that they've consumed their way to nothing, and they have zero. They haven't saved anything because again, no one taught them about money. You just get this money, yay you, and you spend the money, and then you're like, how did it leave me? How did it go away? I don't know where it went. How am I back in this broke position again? Because again, you didn't understand the different factors that play into having a dollar. So I would call this like 101 money. You have taxes, you have income and expenses, And then you got to figure out what you get left after that fact. And then we can talk about what you can do with that money to allocate it to different things so you keep more of the money, because it's not what you make, it's what you keep. And that makes you smart, is making sure you are keeping more of that money, because I don't hate the government. I can disagree with the government and how it spends its money. I can disagree with them with what it does with the money. I disagree a lot all the time with the government. However, I'm okay with the government because I know what I'm giving to the government, so the government can run, so we can have, because I want firefighters and police officers, and I love us teachers, because us teachers to me make the world go round, and I have such a love for us, and I want more of them. And I'd be willing to pay a little bit more taxes so I get a raise. But I understand how the system works, and I'm not upset with it. I just know what I need to do to keep more of my money with me, and I know what I need to do to be able to invest that money to be able to make essentially more money. So, question to you: what side of the ESBI quadrant are you in? How much money I'm going to say, are you keeping based on after taxes, after expenses? How much money are you able to keep? And lastly, please let me know if you able to receive some sort of value from this video. I hope to make tons. If you have questions about what you would want me to see, my channels can be tailored around families and people who need this information. And again, you can be a wealthy family, you can be a not so wealthy family. I think the information pertains to both. And I think that if you are wealthy, you can be wealthier. I think if you are not wealthy, you can become wealthy by understanding this, because I believe, as the educator in me, that education is the key to moving forward. You need more education so you can make better decisions. And I honestly feel in my heart of hearts, if people had this information at an earlier age, if my students had this information, we would be able to make better choices with our life. Now, I'm not saying it wouldn't stop you from doing certain things. I'm not saying if you want to be a lawyer, go be a lawyer. I love lawyers. We need lawyers. Want to be a doctor, go be a doctor. If you want to go work for McDonald's, go work for McDonald's. We need all those people. I'm not knocking any job. I'm not knocking any profession. People need to do what they need to do. But I feel like if people understood these things going into it, knowing that I'm going to take said job X, and that job is going to pay me X amount of money, and based on that money, I have to be able to take this much taxes out. I have to be able to look at my expenses and take this. And so this is what I'm left with. Now, what do I do with what I'm left with? That makes for good, financial decisions. That makes for better decisions down the road, because the other side of it, right? And even for people like myself, I got a couple degrees. I went to school. I got my master's degrees and all this stuff. And I'll talk more about all that. Um, you get trapped. You get trapped because now you make 100, $200,000, and you have to pay this much in taxes, and your expenses gone way up because you bought this big old home and you bought this big old car and you got this big old family, and now you can't leave it because you have worked your way into the S column. You worked your way into this specialist. You make all this money now, but you have all these expenses and you have to pay the government all this money, and you are now trapped in the thing that you wanted. You wanted to become the lawyer, you wanted to become the doctor, but now you're trapped in that system because you were chasing all this money, all this earned income, and then you got it. But now your expenses went up to match that. So now what? Are you happy? And that's why people get burned out working these, 100, 140-hour weeks or 140-hour, whatever it is. You know that lawyers and doctors and all those people work crazy hours, but um, yeah, they get trapped in that system when you get into the S. So, but at least if you understand that going into it, I feel that like even before you become a doctor or a lawyer, even before you take 101 I don't even know what it is, but 101 doctor class, 101 lawyer class, 101 computer, whatever it is, 101, because I don't care about the job. I said you need to take this course so you can understand the basics of money before you jump in, before you go and make this investment into this degree, before you make this investment into this system, because once you start down the path, it gets increasingly harder to jump off that path. the more time you put in and the more investment you have. And especially when you start getting that money and it feels good to make all this money and you're able to buy a car or buy a house, and then but you create gold handcuffs because you get trapped in it because you don't know what that's going to do to you. So again, this is my goal here to help people who are either a starting off to get a better start, people who are in the middle of it, in the process of making decisions, help make better decisions, or maybe even someone who's maybe trapped in that system, maybe who you decided that I want to be a lawyer, and now you're a high paid lawyer, you know, instead of saying, oh my God, all my money is flying out of my bank account because I have to now pay off all my student loans that it took me to go to law school. I have this big old home and now I got to pay this big old house payment, this big old car payment. I have a kid and I have to pay X amount of money to feed them, clothe them, bathe them, take them to, child care, whatever it is. That money starts flying out, and then you start looking at what money do you have left over, and you're like, this is not what I had envisioned. And if I would have known earlier, maybe I might have made a better decision. So in the comments, please make sure that you let me know what I can talk to you more about, what I can educate you more about. Um, and again, this is a two-way street. I look forward to learning from you, like you're gonna learn from me, and I look forward to going down this journey with you because at the end of the day, I'm an educator and I'm a person who loves to learn. And I'm like I said in the beginning, I'm a student of the game. And as I get better, you get better, and as you get better, I get better. So I will catch you guys on the next one. Let me get my Zoa on the way out. There's my Zoe. Now you may start your day. Let's go. I'll see you on the next one.